In today's video, I'm going to be sharing with you common trading mistakes that beginner traders make and how to avoid them. So many traders, especially those that are starting trading, are making a lot of silly mistakes in trading that is costing them a lot. In this video, I'm going to be showing you some of these mistakes that newbie traders are making and how you can correct them. Honestly speaking, if you can be able to identify these mistakes and correct them, you'll be able to make money profitably in the forex market. So if you are a beginner trader, sit tight and watch this video from the beginning to the end. Don't skip any, because you are going to receive a lot of value from this video. And if you are new to my channel, don't forget to subscribe to my channel. Turn on the notification icon to be the first to be notified whenever I drop new updates. The forex market is so complicated. All you need is a simple trading guide so as to become consistent, profitable in the forex market. So in this video, I'm going to be sharing with you 5 common mistakes that so many newbie, or should I say beginner traders, are making in the forex market, and ways that you can avoid making those type of mistakes. It is true that if you are starting as a trader, you will definitely blow your account. That is true. But it is not advisable for you to do that. Even though it is accepted that every newbie traders always blow their account in their first year or second year of trading. But it's not advisable that you should just allow yourself to blow your account, because this money you use in trading is money that you have worked for or you have saved for a long time. So coming to the market to just blow off that money is not advisable. So that is why you need to identify these common mistakes and correct them so that you can be more profitable in the forex market, so that you can last longer in the forex market. So there are 5 mistakes that newbie traders make. Number 1, over leveraging. Newbie traders over leverage a lot. That is to say, they risk too much. When we talk of leveraging has to do with borrowing money from a broker to trade. Let's say you have a small capital, and if you leverage on a broker, it means you are borrowing money from that broker to add up to your own capital to trade. But it could be profitable, and at the same time it could be disastrous. So over leveraging is what has destroyed so many newbie traders, in the sense that they over leverage too much. Some traders can be using 1 to 1000 or 1 to 500 leverage in their trading, which is too high. The normal leverage that can minimize your risk is 1 to 5 or 1 to 10. So if you are a newbie trader, you check your leverage. It's very important so that you can reduce it if it is high, like 1 to 500 or 1 to 1000 or even 1 to 100. These are very risky. Do not over leverage when you are trading. So cut it down to 1 to 5 or 1 to 10 so that you will not over risk your money, because in trading you use money to make money. So if you do not have money to trade, there is absolutely no way you can trade. So that is why you have to consider risk management and money management before you can venture into forex trading. So the first mistakes that newbie traders make is over leveraging. They do not understand what this is and or how it works. Like I said, when you leverage, you are borrowing money from a broker to trade. So it now depends how much are you borrowing from the broker to trade. Are you borrowing what you can withstand, or are you borrowing too much? So that is where the leverage comes from, because you are leveraging on the capital of the broker to trade. So it is always advisable that you use low leverages like 1 to 5 or 1 to 10 while trading. So that is number one. Number two, emotional trading. Emotional trading. So many traders are trading based on fear and greed, and they end up making bad decisions that hurt their trades. If you are trading based on emotion and greed, it simply means that you have not trained yourself well to be a trader, because a forex trader has a plan, a strategy to trade. So if you are trading based on emotion, it simply means you are trading based on fear and greed. That is to say, whatever your mind tells you to do, that is what you will do. Some traders are scared of placing a trade, having the fear that the price might go against them, or they are scared of losing money. But you don't know that in trading, you must lose money. Losing money is inevitable. If you are coming to the forex market and you don't want to lose money, this is not the type of business for you, because losing is part of winning in trading. So for you to become profitable in the long run, you need to have a trading plan. You need to have a trading plan. Your trading plan will combine your strategy and your risk management, including your risk tolerance. So if you want to become profitable in the long run, you need to discipline your emotions so as to trade with self-discipline. Like I said, do not be scared of placing trades, and don't be greedy. Some traders are greedy that they don't have a specific take profit. They want to gather all the money in the market. That is a wrong way of trading. If you want to become profitable, you have to have a fixed target take profit, so that once the price gets to that level, you take your profit. But if you are greedy, you might want to gather all the money in the forex market, and you end up losing your money, because if the market starts going against you, you might not be able to close your trade, because you'll be hoping that the price will reverse and go to your break even. But if the price refuses to reverse and you are still holding on to the trade, hoping the price will reverse, that is disastrous. And before you know it, you might end up wiping out your account. So having a trading strategy is very, very important. And what is a trading strategy? A trading strategy is a set of rules and guidelines that helps you to predict the directional movement of the market, and also how you can be able to enter and exit your trade. So all these combined together form your trading plan. So you must have a specific trading strategy that you are focused on, which has already been back tested in a demo account. These are the things that will help you and remove any fear or greed that might lead to your downfall, because these are the major emotional challenges that so many traders, especially the newbie, are having: fear and greed. So once you have a trading plan, your trading plan will tell you how much you want to make for the day and how much you are willing to risk for the day. Let's say you have $10,000 account in your capital, right? And you say, okay, this is my trading strategy. My trading strategy is going to be based on price action. That is to say, I'll be trading from support and resistance level, and then my stop loss is going to be 20 pips, while my take profit is going to be 60 pips, and that is 1-to-3 risk reward ratio. So what your plan is, if the price goes against me and hit my stop loss, which is 20 pips, I'm going to close for the day and continue the next day. And if the price goes in my direction and hit my 60 pips take profit, I'm going to close for the day and continue tomorrow. So by so doing, you have built a specific trading plan, in the sense that you only take one trade per day, and whenever you lose, you close and continue the next day. Whatever you win, you close and continue the next day. This will help you to stick to your goal, to be focused on your trading plan. And with this type of trading, you will be able to save a lot of profit. Not you make profit in the next few or 5 minutes or 1 hour, you lose all your profit. There are some traders like that. They will make profit today, tomorrow they will lose the whole profit. Or unless tomorrow is too far safe, they will make profit now. In the next 2 hours, they will lose their whole profit. They will start imagining how come. Because of what? They do not have a trading plan. So that is why you need to have a trading plan and stick to it. For instance, if you're trading based on support and resistance, you need to enter your trade from there. That is the level you are expected to enter your trade, from either support or resistance level. So this is very, very important if you truly want to become a profitable forex trader. You must work on your emotions. Stop trading based on your emotion. Stop making silly mistakes based on your emotion if you truly want to become successful in this business. Number 3, not using stop loss. So many newbie traders do not fancy stop loss. They don't know the importance of using a stop loss. They don't know how important a stop loss is. A stop loss is a level where if price gets to, it will take you out of the market. A stop loss is a level if price gets to, it takes you out from the market. So if the price is going against you and you have a stop loss in place, you are able to protect your capital, because when the price gets to your stop loss, it will automatically take you out of the trade and you just lose a specific amount of money which you have already stipulated in your stop loss. So your stop loss is very, very important, very, very important, because it's going to protect you from blowing your account. So many newbie traders, they trade the forex market without a stop loss. Just imagine if, let's say, you are not aware that a news is coming out in the next 5 minutes. Let's say NFP or CPI, this type of news that moves so fast. Let's assume you are trading gold. You know that gold is one of the most volatile pair in the world. You are trading gold and you place a trade. Let's say you place a buy trade with, let's say, 1 standard lot size, but you do not place a stop loss. Maybe you have the mindset that the price will not, in fact, the price will not, I don't even know. Traders that place trade without stop loss, I don't know what they're thinking. You place a trade confidently without a stop loss, and you didn't even bother to check for news to know whether if there's going to be a news release. You did not check to know whether if news is coming out, and you place a trade 1 standard lot size without a stop loss, and before you know it, boom, NFP news was released. And you know when the news comes out, just 1 minute, the price can move 300 pips if you are trading gold. And before you know it, price has gone against you 300 pips. And if your capital is not that huge enough, that is it. The brokers will automatically close you, because you have wiped out your account in less than 3 minutes. You have wiped out your account because of one silly mistake, your inability to place a stop loss. Now let's assume you were able to place a stop loss. Let's assume you're able to place a stop loss. Now the news broke out. The price will just go straight to your stop loss before collapsing down if the market is going down, and you just lose a little amount of money, but your capital will still be there. That is the power of placing a stop loss. So I don't know the idea of not placing a stop loss. What are you hoping for? If you are placing a trade without a stop loss, what are you hoping for? When we all know that the forex market is unpredictable, anything can happen. You might just enter a trade now, in the next 2 minutes, you see price will start going against you. Maybe it might be due to news or anything can cause the price to move. Nobody knows. That is why they say the market is uncertain. Anything can happen. So why not place a stop loss when you are trading something that is uncertain, something that is unpredictable, something that you don't know what will happen next? So why take this type of risk of not placing a stop loss? This is how so many newbie traders end up blowing their account day after day. Consistently, they are just blowing account every day. Because of what? They don't have stop loss in place when they are trading. So you can see how important placing a stop loss is. That stop loss, very, very important. It has saved so many accounts. That stop loss you are seeing. Some of you may not value it, but this stop loss have saved so many accounts from blowing, from getting wiped out. So if you are a newbie trader watching me right now, begin to understand the importance of placing a stop loss when you are trading the forex market. It is extremely important to place a stop loss. Very, very important, because it will safeguard your capital from getting wiped out. So that is the number 3 mistake that newbie traders are making, that is depriving them from becoming successful in the forex market. The number 4 mistakes that newbie traders are making is overtrading. Overtrading. Some newbie traders are overtrading. They are always placing trade without even checking or analyzing the market. They are just placing trade. They don't know that the forex market moves in 3 cycles: uptrend, downtrend, and range. So if you are a professional trader, you should know when to trade and when to stay away. But newbie traders, some do not understand market structure. That is why they are overtrading, just placing trade randomly as if they are gambling. Before you know, someone will be placing almost 50 trades in a day. Some will be placing 70 trades in a day. If you ask them, they will say they are scalpers. What kind of nonsense scalping is that? You are just taking unnecessary risk. If you understand how trading works, then you know that quality is better than quantity. Instead of taking 50 quantity trades, it's better you take just 2 or 1 quality trade. A trade that you have carefully analyzed and you have the confidence that it will go in your direction. Then you place your trade, and once it hits, you close for the day. This will help you to be able to secure your profits. Each profit you make, you'll be able to secure them, so that the profit will start accumulating before it will reach the level that you want to withdraw. But if you are over trading, you will just be trading randomly, and before you know, you become stressed out. Most especially if the market is going against you, you are losing back and forth. You just be trading based on emotion, and before you know it, you end up wiping your trading account, and you lose everything. So over trading is not advisable. Over trading is not healthy. You need to have a plan on how you trade the forex market, when to enter and when to exit. Very important. That is why I say your trading journal is very important. Your trading plan is very important. You journal your trades, and you have a written note where you write down your plan, how you want to trade, how your trading is going to be, like your daily trading, how it's going to be executed. You don't just jump into the market without a plan, because if you don't have a plan, that is where you start over trading. But if you have a plan, you already know when to enter the trade and when to stop trading. You cannot just be trading without even stopping. No. Even though if the market goes on for 24 hours, doesn't mean you should be in the market for 24 hours. You should have a strategic way of entering and exiting the market. So overtrading is what has destroyed so many traders' accounts, especially those that are resuming trading, that are just starting, that doesn't have enough knowledge how this industry works. So placing too many trades without patience can lead to poor risk management. That is why I see some traders, they will just place 20 trades at once. If the price start going against them, you see them finding it difficult to close all their trades. Before you know it, they have lost so much. So it's better you have just 1 or 2 quality setup and you are good to go. So if you are trading, once you wake up, look for 2 or 3 quality setup, enter your trade. Once you cash your profit, you close and plan the next day. That is how professional traders do. You don't place trade randomly. They don't place 100 trades, 500 trades, 200 trades. No, that is gambling. So if you want to become a professional trader, you need to focus on quality, not quantity. Look for a pair, analyze it very well, and make sure that you do a thorough analysis so that you know the direction that the pair is going before you strike. Even if it's 2 or 1 pair that you're able to analyze, fine. Then do not take more than 2 or 3 trades per day. Have a good risk-reward ratio and be patient enough to allow your trade to hit your take profit. Some traders are impatient that if the trade moves a little in that direction, they will just close the trade. But at the end, they will see that the trade has gone more than 30 or 50 pips and they will start regretting. Had I known, if I know, I would have just exercised patience. You don't need to be regretting in trading. That is why you need to have a plan. So quality, like I say, is more important in trading than quantity. So stop placing too many trades and focus on few trades with high win rates. Few trading setup with high win rate. That should be your focus. With that, you'll be able to place few trades, but you will make substantive amount of profits. So if you are a newbie trader, always note this, that quality matters a lot in trading. Then the next mistake that newbie traders are making is the inability to keep a trading journal. Some newbie traders, they don't have a trading journal where they journal down their mistakes. As a newbie trader, you will make mistakes. But how do you know that you are making mistakes if you don't have a trading journal? If you don't have a piece of paper where you jot down your trades, every trade that you take, if you don't have a piece of paper where you jot them down, how are you going to identify your mistakes so as to correct them? Because mistakes is normal, but the ability to correct them is what sets traders apart. If you are making mistakes and you are consistently repeating the same mistake, you will remain at the same spot, unable to grow. But if you make mistakes, you identify the mistakes, you correct the mistakes, and next time you didn't repeat the mistake, that is how you grow, and that is how you become successful in this business. So if you don't have a trading journal, how do you identify your mistakes? So that is why it is very important that as a beginner trader, you must have a trading journal where you journal down your trades. Every trade you take must be written down. Then later on, you can go back to your journal and cross-check your mistakes. What caused you to lose this trade? What did you do that made you to lose this trade? You will be able to find that in your trading journal. Because if you have a trading journal, it will be like a guide. You will learn from your mistake along the way. You don't need to seek help from anyone. You will seek help from yourself, because you'll be able to go to your journal and get facts based on your trade, your past trade. You see the mistakes you make, what you shouldn't do that you did, and then you find a way to correct them in your next trade so that you don't repeat the same mistake again. That is the importance of having a trading journal. So it is advisable that newbie traders have a trading journal while trading the forex market. So avoid these 5 mistakes. If you are a newbie trader or a beginner trader, avoid these 5 mistakes if you want to become successful in this business. Let me do a recap again for you to understand what I'm talking about. The 5 mistakes that newbie traders make are: 1. Over leveraging. Newbie traders over leverage a lot. 2. Emotional trading. Trading based on emotion. 3. Not using stop loss. 4. Over trading. And 5. Failing to keep a trading journal. These are 5 mistakes that newbie traders make that is depriving them from becoming successful in the forex market. So avoid these 5 mistakes to improve your chances of becoming profitable in the forex market. If you are able to avoid these 5 mistakes, you will become profitable in the forex market. So let me do a quick recap on the 5 mistakes that you need to avoid if you want to become successful in forex trading. Number 1, over leveraging. Like I say, don't over leverage. Try and cut your risk to 1 to 5 or 1 to 10 leveraging. Then number 2, emotional trading. Stop trading based on emotion. Try and have a trading plan so as to become profitable in the long run. Number 3, not using a stop loss. Try as much as possible to start making use of stop loss because it's going to protect your capital from draining. Number 4, over trading. Don't over trade. Always look for high quality trading setup and take fewer trades so as to be able to protect your profits. And number 5, keep trading journals. Inability of keeping trading journals. So learn to have a trading journal where you journal down your trades so as to come back to them to check where you make mistakes and so as to correct your mistakes. So that is all I have for you in this video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I will see you again in my next update. Enjoy the rest of your day. Goodbye.